Hi, I'm Bobo. In this week's recap, home prices have fallen by nearly 17% from their record high in 2021. According to the Hong Kong Monetary Authority, the number of negative equity mortgages rose to 11,123 in the third quarter, surging 2.3 times quarter on quarter, close to the 12,000 cases recorded at the end of last year. The market expects another increase of such cases in the fourth quarter, with no chance of falling until the first half of next year. Additionally, for every 5,000 residential mortgage loans, there was one seriously delinquent loan, where the buyer was at least 90 days overdue on making a mortgage payment. In the meantime, no call loan cases or sustained trends have been seen. According to Eddie Yu, Chief Executive of the Hong Kong Monetary Authority, negative equity was concentrated in mortgage insurance cases and 90% mortgage loans. Applicants had to undergo a stress test with an interest rate increase of 3% that year. With strong repayment ability, they were initially unconcerned about potential financial problems. Under a falling property market, Sun Hung Kai Properties launched its remaining flats for the Novo Land Phase II project, guaranteeing buyers a 5% refund on the price of their purchased flats. This refund will be applicable if, by May 2024, the city's house price index is lower than the value recorded in the month of the purchase. Let's apply this to the cheapest unit available, a 238 square foot studio flat bought at a discounted price of 3.35 million Hong Kong dollars or 14,096 Hong Kong dollars per square foot. If home prices fall by 10% in May next year, the buyer can receive up to 5% of the home price, that is about 170,000 Hong Kong dollars. But it's still important to be careful. A guarantee can only help cover half of the fall in home prices. Therefore, it's still best to prepare financially for your down payment. Amid weak market sentiment, the property market continued to slump. Last week, the government withdrew its residential site in Tung Chung due to low tenders, the fifth withdrawal of such a site this year. The site is located opposite Ying Tung Estate in Tung Chung and measures about 110,000 square feet. The site is expected to provide 414 flats with a maximum gross floor area of about 400,000 square feet and market valuation ranging from 800 million Hong Kong dollars to 1.6 billion Hong Kong dollars. According to the government, current market conditions are taken into account when setting the reserve price and closing date. If the reserve price is not reached, the site will not be sold to protect public revenue. So, following the policy address reduction of property cooling measures, it appears that the project has yet to boost land sale revenue, as well as the first-hand residential market. This past Saturday, KT Marina in Kai Tak and South Sky in Aberdeen both launched sales. With 98% of buyers opting for a stage payment plan, KT Marina's first phase sold 55 units, accounting for 25% of its available units and generating over 500 million Hong Kong dollars in total. South Sky sold 35 units, comprising 39% of the available units, which generated over 200 million Hong Kong dollars in sales. Although both projects sold less than half of their available units, it's worth noting that the number of first-hand transactions in the past weekend exceeded 100, hitting a 2-month high. This was due to a quiet market where no new projects had been launched for some time. Combined, KT Marina's Phase 1 development and South Sky sold a total of 90 units, comprising 84% of last weekend's transactions. Other transactions came from remaining inventory of new projects, including Sinoland's Villa Garda 3, which recorded 4 transactions. Turning to the second-hand market, weekend transaction volume of Hong Kong's 10 major housing estates saw a slight rebound. Over the weekend, Hong Kong's 4 biggest real estate agencies recorded 5 to 10 transactions for these estates, all week-on-week increases. Among them, Centerline recorded 7 transactions, 1 case higher than the previous week and hitting a 2-month high. Although agents observed a gradual increase in home viewing appointments, with homeowners offering flexible asking prices, some homebuyers continue to hold back, instead observing the market. While transactions are expected to rise in the future, let's check out 3 cases where homeowners exited the market at a loss. Our first case comes from the Pavilia Farm in Tai Wai. The development's second loss came from Room F, a middle floor unit in Block 7A in its Phase 2A project. Measuring 345 square feet, the one-bedroom flat sold for 6.98 million Hong Kong dollars at 20,232 Hong Kong dollars per square foot. The original owner bought the flat in 2020 for 7.45 million Hong Kong dollars and held the flat for about 3 years, booking a loss of about 470,000 Hong Kong dollars. Meanwhile, Kadoorie Lookout in Homeowner recorded the transaction of a two-bedroom apartment. The lower floor 533 square foot unit sold for 9.25 million Hong Kong dollars at 17,355 Hong Kong dollars per square foot. The original owner bought it in 2014 for 9.79 million Hong Kong dollars. Despite holding it for about 9 years, they still lost about $540,000. Finally, at Mei Foo Sun Chuen, one of the top 10 major housing estates, one owner exited the market after 10 years. This was a unit from the development's fourth phase, located on Broadway. The three-bedroom, 701 square foot flat sold for 6.4 million Hong Kong dollars at 9,130 Hong Kong dollars per square foot. The original owner bought the flat for 6.7 million Hong Kong dollars in 2013 and held it for 10 years before reselling it. Nonetheless, they booked a loss of about 300,000 Hong Kong dollars. Looking ahead to this week, the government is set to announce the city's annual GDP growth. Financial Secretary Paul Chan said that as economic recovery in the first 3 quarters was slightly weaker than expected, he expects the annual GDP growth to be lower than start-of-year predictions. That's all for this episode. See you in the next.